Welcome to the world of property investment. I'm going to show you how you can get your first buy-to-let mortgage. So let's jump straight in to the requirements to qualify. So there are some variations on this, but I want to unlock every single lender for you. So first of all, let's talk loan to value. Typical loan to value is 75% loan to value. What this means is the bank will loan you up to 75% of the property's value / purchase price. And almost all the time, they mean purchase price. Can you get 80% loan to value? Yes, which means you're putting in a little bit less money, but typically 25% deposit is usually the minimum requirement. Then let's talk about minimum income. Now, there are some lenders that will go under this, but in general, if you want to unlock as many lenders as possible, you need to have a safe and secure income of £25,000 per annum. And this doesn't mean that you can't get it if it's less, by the way. It's just the more lenders you open yourself up to, the better the rates, the lower the interest, etc. you're going to be paying. Next is the credito score. So obviously having a good credit history is essential. Now, I wouldn't get too worried about it. I use Experian, and looking on here now, mine has just gone up 112. Amazing. I've got a score of 984. Now, the reason you shouldn't get attached to that is just so you know, that's gone up 112, which means probably last week it was on like 862, which wouldn't have been excellent, it would have been good. And the reason for this is it can fluctuate on, have I just taken out another mortgage? When did I look at my last credit line? How much of my credit card am I using? All of those things. So it can easily be manipulated. But in general, have you got a court county judgment? If you have, that's going to be really difficult. Have you proven that you can borrow money and pay it back? And so if you had a credit card, for example, with £5,000 available on it and you're only using £2,000 of it, that's a really good indication that you're not needing to use all of your money. So a top tip there with credit scores is if you do have a credit card, maybe get it paid down and utilize 40% or less of your available credit. And that's a really good indicator to the banks that you've got credit available to you, but you're being reasonable with your money. You're not maxing out everything all the time, okay? And it's really good. The better your credit score, the better lending you're going to get. Next is experience. So look, naturally, the first time for everything is a little bit awkward. Look, first-time landlords, naturally, it's like your first domino, your first anything, closing your first investor, getting your first deal accepted, all of these sort of things. The first time is more difficult because there's a limitation of lenders. But once you tap into the market, it gets easier and easier and easier. So you are going to face more restrictions, but you just got to get with the program. Next is stress testing. So lenders are going to assess whether rental income covers mortgage payments. And the way they do this is typically 125%, and it's called mortgage coverage, okay, or interest coverage. So let me give you an example of this. So typically it's 125% at the market rate. So let's just say 5% interest, and let's say the loan value is 100K. So not the house that's 100K, the actual debt they're going to lend me is 100K. So then what we're going to do is charge the 5% interest. 5% of 100K is £5,000, and that's per annum. That's going to cost me because they're interest-only mortgages with buy-to-lets. And then you're going to times that by 125%, or 1.25, which is £6,250. And then what they're going to do with that £6,250 is they're going to go, what is the rent on this property? So let's just say, for example, it's £700 a month, this property. They times that by 12, 8,400. Is the yearly rent above 1.25 or 125% interest coverage? So it's called stress testing. And in general, you just get it. How much debt is it? Times it by 5%. Times that by 1.25. That will tell you a figure. If your rent is higher than that, then you are golden. And if you can tick all of these boxes, you are hot to trot. So let's jump into documents that you're going to need. Number one, proof of income. Payslips, tax returns, SA302s is what they are called. So if you've got a business, then you will usually need about 2 years worth of SA302s, which is your end of. There are lenders that will lend to you if you've only got 1 year. If you don't know what SA302s are, so if you're a PAYE employee, you get a payslip every month, you use that. to show your mortgage broker. Usually they're going to require bank statements. A majority of lenders are 3 months bank statements. Some lenders are 6 months. Don't worry, they're not looking for anything tragic. It's just, are there any like big payments that come out? Are there any big chunks of money that come in? And ultimately, they kind of want to just understand, where's the money coming from? Next is a credit report, although often this doesn't come from you. Sometimes they just search it themselves, but submitting a good credit report is often going to help you. Proof of deposit, okay? And this isn't just proof of here is the money, it's also where did this money come from? So unfortunately, money laundering exists, which is washing bad money with the good and then coming out with all good money. So in the UK, money laundering in property is very common, okay? And so anti-money laundering checks, just to make sure you're not doing anything dodgy, is really important. So they understand that. Next, they need the property details. So what are you buying it at? What's the rental income estimates? All of those sort of things. And that is enough to get them started on the next steps of your buy-to-let mortgage. So first things first, they're going to check your eligibility. Now, what I recommend with this is talk to a qualified mortgage broker or utilize some of the best software out there. I'm going to tell you right now, you can get some of the best mortgages right now on Lendlord, completely free, by the way. I'll put a link in the description and just click on there, fill in your details on there to make an account. It will blow your mind. Everything from finding the deals to funding the deals to getting your legals done, all in one place. So once you talk to one of the broker team through Lendlord or your own, if that is you should be able to be pre-qualified, find out what lenders are going to be the best, what deposit they recommend, what rates you're likely to get, and there's going to be the right lender for the right person and the right property. So different lenders have different criteria for first-time landlords, and to help find the right buy-to-let, you want to be talking to the right people. The reason I quite like Lendlord in particular, this might sound counterintuitive, is that I don't need to talk to somebody immediately. So what they have is this really cool sort of feature on Lendlord where you can just click through, fill in some basic details, and it gives an indicative idea of what lenders there are for this property. And then if I know that I want to proceed on this, I just click a button and schedule in a call, which I really like because I like to have information available to me up front and then have the conversation, and Lendlord makes that available. So I'll put a link below. It's completely free. I don't get paid anything if you sign up, by the way, but I use it a lot. I've financed a lot of my properties and now refinancing with Lendlord as well. So you can choose from, I think, 48 lenders on there, and all of the conditions are on there for you. So it's really, really powerful. So now that you've got your mortgage broker in place, you then get an AIP, DIP, and every other acronym going. So decision in principle or agreement in principle. Essentially, when you're putting in offers, it shows you're serious. And when you've got a broker to give you a back decision in principle or agreement in principle, which is basically saying this man or lady is legitimate, they're able to move forward, and they can buy this property. So you get your offer accepted and secure the property. And you want to make sure just before submitting the formal agreement, which is going to do the hard search on your credit rating at this point, you just want to check that it actually meets the lender requirements. And a lot of people don't do this. If you've got a mortgage broker, they will do this for you, and Lendlord do that for you, for example. And then what you would do is you apply officially for the mortgage. So you'll submit your application with the required documents that I went through. They will then get a valuation, and what happens is a RICS, which is a Royal Institute of Chartered Surveyors, somebody that is qualified, will go out to the property and actually value it and go, you're buying it at this, do I think that is worth the bank lending a majority of the money? Because you have to think, the bank's putting in 75%. You're only putting in 25%, right? So is it worth me putting in that money? The lender will then assess the property and the rental potential. And then at that point, the value comes back and you receive your mortgage offer. And if approved, which you should be if your broker's good, you move on with the purchase. Now, what could go wrong? What are the common pitfalls and how do we avoid them? Number one, applying for mortgages without a mortgage broker, I think, is absolutely stupid. A really good mortgage broker only costs about 500 quid, and that is such high value for money where they can do all these checks and make sure everything is tickety-boo for you, all right? they should also be looking at the criteria before you formally submit anything. So number one, not getting a mortgage broker. Number two, applying without checking lending criteria. Number three, underestimating additional costs. It's like people just forget there's stamp duty, solicitor fees, refurbishments, etc. Number four, choosing the wrong mortgage product, i.e. fixed versus variable. I just won't give financial advice on this at all, but I'm telling you right now, most of mine right now are, I actually mixed them up. 80% are 5-year fixed, 20% are 2-year fixed, just to sort of take advantage of will they come down a lot more than I think in the next couple of years. So do not make these mistakes. Ultimately, you want to be in the right position to open you up as much as possible. So each time that you're doing something to restrict, like I am a first-time buyer, which means you're going to restrict your mortgageability anyway. And I'm only willing to put in 20%. Okay, that's just shrunk it even more. Oh, by the way, I've got a bad credit rating. Okay, cool. And I only earn 20 grand a year. Okay, we're getting to that point where you're really narrowing it down. So if there are ways for you to open up the market, do it. Don't make the same mistakes. And honestly, just educate yourself. Jump on something like Lendlord, check it out and just play around with it. It doesn't do any searches, by the way, until you actually apply for a mortgage, but it just gives you an idea of what products are available. Check it out, it will make a big difference. And I know this is a very basic video, by the way, but the idea of this is just to give you a little bit of information to help you in the financing and conveyancing process, because it can seem confusing at first, but it is simple when you get used to it and when you have experts like Lendlord's help. They make it simple in just a few clicks. So if you haven't used it, check it out. Let me know what you think. And for those that are new to property, let me know if you've got any questions. I've made this for specifically people at the beginning of their journey, but you'll be shocked how quickly you can build up your education and the foundations and start taking action. I hope this has been helpful. If you're new to the channel, by the way, and you want to learn everything that I can possibly give you over my last 10 years of investing in property, make sure to hit subscribe and the notification bell, and I'll see you in the next video.